Hi, this is Kyle Markham with International Futures Group in Chicago, a division of EFG Group. Want to do a little bit of grains commentary for today, Tuesday, March the 24th. Somewhat of a quiet day, especially in the corn market. I mean, we were able to get higher. You've seen several, decent days in a row with corn trying to move higher. It seems to me that in front of this report at the end of the month, we are going to at least test that $3.95.96 to $4 resistance in the May contract. Personally, I don't really anticipate we're going to get a whole lot more excited than that in front of the report, and I think actually it would be more healthy if we saw a bit of a two-sided trade as we get closer to that. The biggest move today was in the wheat market. You'll notice that it's been rallying consistently for the last several days. Yesterday we made new highs for the move at 540.5, and then we sold off, but we couldn't actually break any lower. We just sat there for the rest of the day. Then after the close, we had winter wheat ratings that came out, an improvement versus trade expectations. You then had a gap lower last night, so it actually is a rather ugly looking chart when you consider that you're effectively looking at kind of an island reversal because you have a gap above the market. And they sat on the wheat throughout the nice session and then sold it as soon as the market opened, trading all the way down to I think 522.5 on the close. What's interesting to me is I think not only is this a little bit of spec length that we saw recently kind of coming out of their positions as the fundamental picture starts to change, but you also have that wheat corn spread. Remember, guys, it wasn't very long ago that was trading 90 cents in the May. Yesterday morning we traded out to $1.50, so that's pretty an extensive move, and we hadn't seen any kind of a setback. Obviously, finally it came today. Spread traded all the way down to $1.30 pretty much, and I think that was a function of why corn was having some of that left-handed support from the spread, and wheat just really was kind of a poor trade all day. So from here, it looks like we'll probably test 520. You would think next level support is going to be about 515. Technically, you wouldn't want to see it a whole lot lower than that if we're supposed to believe that there's still some upside in this market. But time's going to tell, and we'll just see. It was a firm corn close, went out on the highs with some MOC buying. We'll see how they open tonight and if that can lend any support to wheat, even given they're coming out of those wheat corn spreads. Looking at soybeans, really quiet today, 10-cent range. Been a while since they were that tight. Inside day versus yesterday. The previous days I think was more of a squeeze. People again kind of try to get short in the hole, and once more that's proven to be a poor trading strategy as the beans come springing back. So we went all the way to what, 953, trade 990 here yesterday or the day before, so pretty good bounce. No conviction today, pretty light volume, and just a whole bunch of nothing. So they try to firm on the close. I feel like perhaps the beans are already in this kind of waiting pattern as we approach the report. We'll see, this evening if we can get a test of today's highs at 985. Obviously, after that, you're looking at yesterday's highs at 990. Not really expecting a whole lot more upside in the near term. We need to get a better handle on the fundamental picture, and ideally, we're going to get that from the report next Tuesday. That's all we have for today. Again, I'm Kyle with International Futures Group, a division of EFG Group in Chicago. Don't hesitate to give us a call if you've got any questions. Thanks.